Most people panic when the economy crashes. They lose their savings. They lose their jobs. They lose everything. But one man saw it coming years in advance. He warned everyone. He prepared his clients. And when the 2008 financial crisis destroyed trillions in wealth, his fund made money while everyone else burned. This is Ray Dalio, the billionaire, who predicted financial collapse and built a $15 billion fortune by understanding how the economic machine really works. The kid who started trading at 12, Raymond Thomas Dalio, was born on August 8, 1949, in Jackson Heights, Queens, New York. Today, at 75 years old, he's worth approximately $15 billion and founded Bridgewater Associates, the largest hedge fund in the world. But Ray didn't come from wealth. His father was a jazz musician who struggled to make ends meet. His mother was a homemaker. They were working class, living paycheck to paycheck. As a kid, Ray was restless and rebellious. He wasn't interested in school. He got into fights. He broke rules. A childhood friend remembered Ray was wild. He didn't care about grades or following orders. He just wanted to figure things out himself. But at age 12, something changed. Ray started caddying at a local golf course, carrying bags for wealthy businessmen. While caddying, he overheard conversations about stocks, investments, and making money. Ray later recalled, "These guys were talking about stocks going up and down. I didn't know what stocks were, but I wanted in." With money he earned caddying, Ray bought his first stock, Northeast Airlines, for $300. He chose it simply because it was the only company he'd heard of that traded below 5 per share. The stock tripled. Ray made a profit. He was hooked. He said years later, "That first investment taught me something dangerous, that making money in the market was easy. Of course it wasn't, but I was 12. I didn't know better." From college dropout to Wall Street, Ray attended Long Island University and then got an MBA from Harvard Business School. But even at Harvard, he was unconventional. He questioned everything. He argued with professors. He didn't follow the standard playbook. A former classmate said, "Ray drove everyone crazy." He challenged professors in class. He'd say their theories were wrong, but he was usually right. After Harvard, Ray worked on Wall Street as a trader and analyst, but he didn't fit in. He was too independent, too opinionated, too willing to challenge authority. In 1975, at age 26, Ray got fired from his job after punching his boss during an argument. He later admitted, "I was arrogant. I thought I knew everything. Getting fired was the best thing that happened to me." With no job and no prospects, Ray did the only thing he could. He started his own company. In his 2-bedroom apartment in New York, Ray founded Bridgewater Associates in 1975. He was the only employee. His office was his living room. He started by providing economic consulting and analysis to corporate clients. He wasn't managing money yet. He was just selling advice. An early client remembered Ray was intense. He'd create these detailed economic reports explaining how everything connected. It was brilliant, but overwhelming. Ray's approach was different. While other analysts relied on gut feelings or trends, Ray built mathematical models. He studied economic history. He looked for patterns. He once said, "I wanted to understand how the economic machine works, not opinions, not guesses, just facts and patterns. The system that beat the market." By the early 1980s, Ray started managing money for clients. He developed a systematic, rules-based approach to investing. He called it Pure Alpha. The strategy was based on diversification, risk management, and understanding economic cycles. Ray believed most investors failed because they let emotions drive decisions. Fear and greed destroyed portfolios. His solution? Remove emotion. Follow the system. Trust the data. A former Bridgewater executive explained, "Ray built a machine. You input data, the machine analyzes it, and outputs investment decisions. Human emotion doesn't enter the equation." This approach worked. Through the 1980s and 1990s, Bridgewater's returns consistently beat the market. But Ray wasn't satisfied with just making money. He wanted to understand why markets moved. He wanted to predict the future. He studied historical financial crises, the Great Depression, hyperinflation in Weimar Germany, the collapse of empires. He looked for patterns that repeated across centuries. Ray concluded that economies move in predictable cycles. Debt builds up. Central banks print money. Bubbles form. Then everything crashes. He wrote detailed analyses explaining these cycles. He shared them with clients, policymakers, and anyone who would listen. Most people ignored him. They thought he was paranoid. But Ray kept warning a massive debt crisis was coming. The prediction that made him a legend. In 2007, the U.S. economy looked strong. Housing prices were soaring. Stock markets hit record highs. Everyone was making money. Everyone except Ray Dalio. He saw danger. Ray's model showed that household debt had reached unsustainable levels. Banks were lending recklessly. The housing market was a bubble ready to burst. He wrote memos to his clients warning them, a major deleveraging is coming. Prepare for the worst financial crisis since the Great Depression. Wall Street laughed. Economists dismissed him. Even his own employees questioned him. But Ray was certain. He restructured Bridgewater's portfolio to protect against collapse. He bet against housing markets and risky debt. Then, in 2008, everything Ray predicted came true. Lehman Brothers collapsed. Banks failed. The stock market crashed. Trillions of dollars in wealth evaporated. The global economy plunged into the worst crisis since 1929. While most hedge funds lost 20%, 30%, even 50% of their value, Bridgewater made money. Ray's fund was up nearly 14% in 2008. A financial journalist who covered the crisis said Ray was the only one who saw it coming and positioned for it. He became a legend overnight. Clients who trusted Ray were protected. Those who ignored him lost everything. Ray later explained, "I didn't have special powers. I just studied history. Financial crises follow patterns. If you understand the patterns, you can prepare." The radical transparency experiment. Ray didn't just revolutionize investing. He revolutionized workplace culture. At Bridgewater, Ray created what he called radical transparency. Every meeting is recorded. Every decision is documented. Employees are encouraged to challenge anyone, including Ray. There are no private conversations, no office politics. Everything is out in the open. Ray implemented a system called believability, weighted decision-making. In meetings, people's opinions are weighted based on their track record and expertise. If you've been right before, your opinion carries more weight. If you've been wrong, it carries less. Ray defends the system. Most organizations fail because people don't tell the truth. Egos get in the way. Politics get in the way. We eliminate that, but critics call it cult-like. Some former employees describe it as psychologically exhausting. One ex-employee told the press, "Bridgewater felt like a social experiment. Constant surveillance, constant feedback. It broke people." Ray's response, "We're not for everyone. But if you want truth and excellence, this is how you get it." Despite the controversy, Bridgewater became the largest hedge fund in the world, managing over $150 billion at its peak. The principles that guide. Everything in 2017, Ray published a book called Principles, Life and Work. It became a bestseller, outlining the rules and philosophies that guided his success. The book is dense, detailed, and methodical, just like Ray. It covers everything from decision-making to relationships to understanding economic cycles. Ray's core principle is simple. Truth is the essential foundation for producing good outcomes. He believes most people fail because they avoid painful truths. They lie to themselves. They let ego cloud judgment. Ray's solution? Embrace reality. Face your weaknesses. learn from mistakes. A business consultant who studied the book said, Ray's principles are powerful but uncomfortable. Most people aren't willing to be that honest with themselves. Ray also published Principles for Navigating Big Debt Crises, a detailed analysis of how economies collapse and recover. The billionaire who gives it away. Despite his $15 billion fortune, Ray lives relatively modestly. He doesn't collect yachts or private islands. He focuses on work, family, and giving back. Ray is deeply philanthropic. He's donated hundreds of millions to education, ocean exploration, and mental health research. He's pledged to give away more than half his wealth through the Giving Pledge, a commitment started by Bill Gates and Warren Buffett. Ray explained, "Money beyond a certain point doesn't change your life. I have more than I need. Now it's about impact." He's funded programs to improve education in Connecticut public schools. He supported ocean conservation through Oceana. He's invested in mental health research, the legacy of seeing what others miss. At 75, Ray Dalio has stepped back from day-to-day management of Bridgewater. He's transitioning leadership to the next generation, but his influence remains. Bridgewater continues managing over $100 billion. His books are studied worldwide. His principles are taught in business schools. Ray proved that understanding economic history and patterns can predict the future. That systems beat emotions. That radical honesty creates excellence. He's been called a genius, a prophet, and a control freak. He's been praised and criticized in equal measure. But nobody can deny his impact. He built the world's largest hedge fund. He predicted the worst financial crisis in generations. He changed how people think about markets, truth, and decision-making. A financial historian said, Ray Dalio is one of the most important investors of our time. He didn't just make money. He created a framework for understanding how the world works. From a 12-year-old caddy buying stocks to a billionaire who predicted collapse. From a 2-bedroom apartment to the largest hedge fund on earth. From being fired to being a financial prophet. That's the story of Ray Dalio, the man who saw what others missed and built a fortune on truth. If you enjoy learning about Ray Dalio's journey from Fire Wall Street trader to billionaire prophet, let us know who we should uncover next. The greatest fortunes are built by seeing the future before it arrives, and we're revealing how they did it.